See, today we have to start controlling, and I did not send you the controlling material, right? So I will send you the controlling material today. And today, entire class is only theory part, right? So you need not write or like anything. Controlling. This component is used to provide the information to the management for the performance analysis and decision-making process. And this component is mainly used for internal reporting. See, you take any company, there are three levels of management: lower level management, middle level management, and top level management. So lower level management mostly contains the lower level employees like cashiers, accountants, etc. etc. So this lower level management is always concerned with the postings, right? But middle level management and lower level management. The middle level management comprises the departmental heads. So these departmental heads, they want to understand how my department has worked in the previous month, whether my department has been able to achieve the targets or not, and what is the performance of employees in my department, how they are able to, sorry, whether they have been able to achieve the targets or not. This is called performance analysis. So the departmental heads are very much interested in the performance analysis at the end of every month. So for the purpose of performance analysis, they need some information. That information is completely provided by the controlling component. So the controlling component is nothing but your cost accounting and management accounting. That's it. Then we have the top level management. So the top level management is always concerned with strategic decisions. The strategic decisions means the decisions which have the long-term impact on the profitability of the company. So for the purpose of strategic decisions also, they need some information. Like, say, for example, we are producing and selling 3 products. They are producing and selling 3 products, right? Now, this year, we want to introduce, our management has taken decision to introduce some additional capital of 50 crores. So this 50 crores additional capital is to be invested in which product? That is the decision taken by them. And this decision should give the way to the management to increase the profits, right? See, here they have to consider some parameters. Marketability of each of the product. For each product, we have the equal opportunities of marketing. And we have to look into the availability of the production capacity. So for each product, we have the sufficient production capacity, right, to increase the production of that product. And also, we have the sufficient sales force to push the increased production into market. So like that, all the parameters are equally weighting, equally available for each product. Apart from this, the most important information required by the management is profits contributed by each of the product. If they can identify the profit, if they can identify the product which is earning more profits to the company, then they can go for increase of that product in terms of production quantity. So for that, that means the management wants to know what is the profit from each of the product. Product-wise profitability they have to know. For that, financial accounting component will not help anymore, because in the financial accounting component, right, we prepare P&L account, right? That P&L account will display the total profits for the company code as a whole, for the entire company, for entire all the 3 products together, the P&L account will display the profit. We cannot distribute and we cannot bifurcate the profits according to products in the financial accounting because it's not legally required. So the financial accounting is always implemented to meet the legal requirements of the respective countries in which you are doing business in the preparation of financial statements, right? So there is no any legal requirement to distribute the profits according to products. But here the management wants to know what is the profit for each of the product. For that, compulsory we have to depend upon the controlling component. So in the controlling component, there is one module which is called profit center accounting. So using the profit center accounting, we can distribute the entire profits of the company according to products. That is the significance of the controlling, right? So how to find the profits according to products, I will show you, right? But here I am explaining the significance of the controlling component. So the controlling component is always concerned with analysis of expense and revenues. So after sending this material, right, you have to write here, okay? Here you have to write the controlling component is always concerned with analysis of expenses and revenues. The controlling component is always concerned with analysis of expenses and revenues. Now, why it's always concerned with analysis of expense and revenues? Every company does the business with the limited resources. With the limited resources, they want to maximize the profits always, right? Now, if you want to increase the profits, what are the alternatives available to any company? First, they have to reduce the expenditure, or they have to increase the revenue, or by both. So you can maximize the profits either by reducing the expenditure, or by increasing the revenues, or by both. Now, if you want to reduce the expenditure, you have to analyze the expenditure, right? So you have to analyze the expenses to find the ways whereby you can reduce the expenditure. Again, you have to analyze the revenues whereby it is possible to improve the revenues, right? That's why this controlling component is always concerned with analysis of expenses and revenues. So this controlling component is always concerned with P&L account items only. This point also you can write. The controlling component is always concerned with analysis of P&L account items only. Okay. Now, so where these expense and revenues are available, where the data of expense and revenues are available in the financial accounting general ledger accounting, right? So you cannot analyze these expense and revenues as such and as it is in the financial accounting. They are to be brought into controlling. So how these expense and revenues are brought into controlling, right? That is called data flow. So in the financial accounting, right, we maintain the information of expenses and revenues in the general ledger accounting, right? So the general ledger accounting is called main ledger, and all other modules of SAP are integrated with the general ledger, and the sub-modules of FI are also integrated with the general ledger. Here, the general ledger is integrated with the metals management, sales and distribution, production planning and control, HR, plant maintenance, asset accounting. So we have seen how the asset accounting is integrated with the general ledger through reconciliation accounts, right? Now, not only these modules which I mentioned here, all the modules of SAP are integrated with the general ledger accounting, right? We will see how they are integrated in controlling also. We will see how they are integrated with the metals management, SD, PP, etc. Now, you know, each module is used to process the business transactions in every department, in the respective departments. So every day, in every department, some expenses are incurred and some revenues take place. Whenever the expenses are incurred and revenues are taking place, they are entered by the end users in the respective departments. As a result of the integration process, right, the respective ledger accounts, expense and revenues are available in the general ledger account. That means all the expenses and revenues of the company code are available in the general ledger account. So from the general ledger accounting, the expense and revenues are taken into controlling component. So in the controlling component, all these expenses and revenues are analyzed. So how they are analyzed, we will see, right? In the coming days, we will see. how these expenses and revenues are analyzed in the controlling component. But what you have to understand is, from the general ledger accounting only, all the information of expenses and revenues are transferred to controlling component, right? Now, we have to understand one more concept, controlling object. Controlling object. See, controlling object means it is the entity for which the information is maintained in controlling. It is the entity for which the information is maintained in controlling. That means if you look at financial accounting, in the general ledger accounting, we have posted expense and revenues with reference to GL account, master record. In accounts payable, we have processed invoices, payments, right, advance payments, returns, etc., with reference to vendor master record. Then in account receivable, we have processed sales invoices, payments from customers, advances from customers, sales returns, etc., discounts, etc., are processed with reference to customer master record. Similarly, in asset accounting, right, we process the acquisitions, scrappings, then transfers, depreciation calculation, etc., with reference to asset master record. Like that, in controlling also, there should be something, please remember, in controlling also, there should be something with reference to which the information is maintained, processed, and analyzed. MPA. M for maintaining, P for processing, A for analyzing. So, in controlling also, there, I told you, controlling is always concerned with analysis of expense and revenues, right? That's why in controlling also, there should be something with reference to which the information is maintained, information is processed, information is analyzed. That something is called controlling object, right? Remember, in controlling, information refers to always information of expenses and revenues, that's it, right? So the system maintains the information for each controlling object through primary cost element and secondary cost element. So what is primary cost element and secondary cost element? We will discuss in the cost element accounting, right? Cost element accounting is the first module and base module for all the other modules in controlling. So at that time, I will explain you what is primary cost element and secondary cost element, right? Then the controlling objects were already defined in the system. We can use one or more of the controlling objects for maintaining the information according to client requirements. The following are the controlling objects defined in the system. Number one, cost center is a controlling object. Internal order, cost center, profit center, and profitability segment. So, cost center is a controlling object. Means with reference to cost center, we maintain the information of expenses and revenues. With reference to internal order, we maintain the information, we process the information, we analyze the information with reference to internal order, right? So, cost center, for the cost center, the information is maintained in cost center account. This is one module in controlling. So with reference to cost center, we maintain the information of expenses, we process the information of expenses, we analyze the information of expenses in the cost center account. Then with reference to internal order, we maintain the information, right, with reference in internal order account. For the cost object, the information is maintained in product costing. For the profit center, we maintain the information in the profit center accounting. For the profitability segment, we maintain the information in profitability analysis. Profitability analysis. So these are the submodules in controlling which we are going to cover, and also normally all these submodules are implemented in controlling, right, as part of implementation. Now, for all these submodules, there is one base module, right, which is called cost element accounting. So without cost element accounting, right, you cannot maintain the information, we cannot analyze the information for the controlling objects. Now, what happens in each submodule, I have just given the brief introduction, right? Just to go through this during your preparation, right? But these modules we are going to explain, right, for number of days in the coming months, right? Then the controlling object receives the information from every module as follows. Every controlling object receives the information. Remember, I told you, information always refers to expense and revenues only, right? So the controlling object receives the information from every module as follows. Raw material consumption for the metals management. Raw material consumption from the metals management. See, we have one module, metals management, right? MM. So when the MM is implemented, right, the purchase orders, purchase invoices, then purchase returns, etc., and also inventory management activities and the material issues to production. All these business transactions are processed from metals management only. So whenever there is a requirement for any raw material in the production process, that raw material is issued from the warehouse and that business transaction is entered by the MM end user in MM module. So we integrate MM with FI, right? Then the respective GL account, raw material consumption. So when the raw material is issued to production, what is the GL account to be updated? Raw material consumption GL account. So this raw material consumption GL account is available in the general ledger accounting. So because of the integration process, right? When the raw material is issued to production, the raw material consumption GL account is automatically updated in the general ledger. That means what? In which module the raw material consumption expenditure is taking place originally? In metals management. From metals management, the raw material consumption is updated in the general ledger, right? From the general ledger, it is transferred to controlling. From the general ledger accounting, it is transferred to controlling. Not only raw material consumption, right? All the inventory management related expenses, all the input taxes, inward freight, means all the expenses which are related to your metals management, material issues are taken from metals management. From the metals management, they will be updated in the general ledger accounting. From the general ledger accounting, they are transferred to controlling. That's why we say that, right, the raw material consumption expenditure is taken from metals management. Then depreciation from asset accounting. Depreciation from asset accounting. That means we have seen already in AFAB, right, every month or every period and the user executes the transaction code, AIFAB, right? So as a result, the depreciation is calculated and the depreciation GL account is updated in the general ledger. That means the depreciation expenditure is originally incurring in asset accounting module. From the asset accounting module, it is updated in the general ledger. From the general ledger, it is transferred to controlling. Then revenues and sales deductions from the sales and distribution module. Sales deductions means sales related expenses you can assume here. Sales deductions means the sales related expenses. So we implement SD, right? So when we implement SD, the sales orders, right, the deliveries and the sales invoices, sales returns, etc., are processed from SD1. So whenever the sales invoice is raised and entered in SD by the SD end user, through the integration process, the GL account, sales account is updated in the general ledger. So till now, we have posted invoice in F-28, right? But now, when SD is implemented, right, the processing of sales invoice is entirely different. So that process I will show you in SD integration, right? So for the time being, remember that when the SD is integrated, this point I already explained in account receivable also. When the SD is integrated or implemented, the sales invoices, sales orders, sales returns are processed from SD. So when the sales invoice is processed in SD, through process of integration, the sales GL account is updated in the general ledger. From the general ledger, that is transferred to controlling. Then, not only sales revenue, sales related expenses like rebates, right? then outward freight, then output taxes. Output taxes means the taxes which you pay on the sales is called output taxes, right? They're also processed from SD only. So from SD, they will be posted to general ledger. From the general ledger, they will be transferred to controlling. Then personnel cost from human resource second. There is one module HR, right? So in HR, there is a sub-module payroll accounting. So in HR, every month end, the user executes the payroll. As a result, the salaries will be transferred to the bank accounts of respective employees. Not only transferring the salaries, when the salaries are transferred, the respective GL account, salaries account, bonus account, contribution to PF, contribution to ESI, etc., GL accounts are also updated in the general ledger. From the general ledger, they will be transferred to controlling component. Then the production information and the production schedule information is transferred from production planning and control. Then from the plant maintenance, the repairs and maintenance GL accounts or the repairs and maintenance expenses will be transferred from plant maintenance to general ledger. From the general ledger, they are transferred to controlling. Then all the quality management related expenses, all the quality maintenance related expenses also will be transferred from QM to quality management module to general ledger. From the general ledger, they will be transferred to control. Then, see, like that, majority of the expenses will be taken from different modules in SAP. Then, what are the expenses that will be transferred from directly from financial accounting to controlling? All the expenses other than what we discussed till now will be processed directly in financial accounting general ledger. From there, they will be transferred to controlling. So those expenses are called overheads. Those expenses are called overheads. So overheads will be taken from general ledger accounting or financial accounting directly. So what is overheads? This is the most confusing concept, right? For most of the students, this is the most confusing topics, overheads, right? Now I'm going to explain you what is the overheads from the academic point of view, right? See, overheads means it is that sum of the indirect material cost, indirect labor cost, and indirect expenses. It is the sum of the indirect material cost, indirect labor cost, and indirect expenses. So you have to understand what is indirect material cost, indirect labor cost, and indirect expenses. That's very, very important to understand. So before going to understand what is overheads, first we have to know the objectives of the cost accounting. So the objectives of the cost accounting are to find the cost of the product or service and to control the cost wherever it is possible. Right? Just a minute. So before going to understand what is overheads, we have to understand, we have to know the objectives of the cost accounting. Number one, to find the cost of the product or service, then to control the cost wherever it is possible. This is the very, very important objectives of the cost accounting. To control the cost. To control the cost means trying to reduce the cost wherever it is possible and also keeping the cost under the control. So what exactly you mean by this, right? Let us see. You take the cost of any product or service, right? It contains broadly three components. They are called cost elements. These are nothing but your cost components, right? This is from academic point of view of cost accounting. Cost element has a different meaning in SAP that we discuss later on. See, if the cost of any product contains three components. Number one, material cost. Number two, labor cost. Number three, other expenses, right? Then material cost is again divided into direct material cost, indirect material cost. Labor cost is again divided into direct labor cost, indirect labor cost. Other expenses are divided into direct expenses and indirect expenses. So what do you mean by direct material cost, indirect material cost, direct labor cost, indirect labor cost, and etc.? See, direct material cost. It is the cost of the material which satisfies the following two conditions. Number one, the material should be directly identified with any product or service or department. The cost of that material should occupy the larger portion of the cost. So any material which satisfies both the conditions, please remember, the material has to satisfy both the conditions. Then that material is called direct material. Then indirect material cost. It is the cost of the material which satisfies only one or none of the above two conditions. Let us take one example and let us try to understand. So we are producing and selling a computer table. I am giving a simple example. Computer table size, right? 3 into 2. 3 feet into 2 feet, right? Now, in order to manufacture this one computer table, to manufacture one computer table, right, we require different materials. Number one, wood. Number two, iron frame, right? Number three, nuts and bolts. Number four, gum or adhesives, right? So these are the metals what we use. So out of these four materials, you take wood. See, by just measuring the wooden pieces, what you have used in the computer table, we can say that this much square feet of wood we have used in the manufacture of this computer table. So first condition is satisfied. What is that first condition? The material should be directly identified with any product or service or department, right? So the first condition is satisfied. Now, what is the proportion of the cost of the wood when compared to total cost of the product? Say, for example, the cost of the computer table is 1,000 rupees, right? So the wood cost will be at least 30 to 35% of the total cost. So wood is satisfying both the conditions. So wood is called direct material cost. Wood is called direct material, and the cost of the wood is direct material cost. Then iron frame. So we fix the wooden pieces in the iron frame, right? So we bend the iron frame and we fix the wooden pieces, right? So by just measuring the running length of the iron frame, we can say that this much of the running feet of the iron frame we have used in the manufacture of the computer table. First condition is satisfied. Then the second condition. If you compare the cost of the iron frame with the total cost of the product, it will also occupy minimum to minimum 25 to 30%, right? So it is satisfying second condition also. So iron frame is also a direct material, and the cost of the iron frame is called direct material cost. Then coming to nuts and bolts, right? So by just physically counting the nuts and bolts in a computer table, you can say this many number of nuts and bolts have been used in the manufacture of the computer table. First condition is satisfied, right? But what is the proportion of the total cost of the nuts and bolts when compared to total cost of the product? Hardly we use the nuts and bolts worth of 20 to 25 rupees. Then the proportion of these 25 rupees is very, very low, very, very less when compared to 1,000 rupees. So the nuts and bolts is not satisfying second condition, right? So the cost of the, indirect material means it is the cost of the material which satisfies only one or none of the above conditions. So the nuts and bolts is satisfying only one condition. So this is called indirect material, right? So the cost of this nuts and bolts is called indirect material cost. Right? Now, gum and adhesives. See, you cannot measure. You cannot even measure how much of the gum you have used in the manufacturing computer table. Or by some means, you are able to measure, right? The quantity of the gum you have used in the manufacture of one computer table. But what is the proportion of the cost of the gum when compared to total cost of the product? Very, very less. So this is also called indirect material. And the cost of gum and other adhesives is indirect material cost. Like that. One more example. Take the shirt. Shirt what we wear. The cost of the cloth is, right? Direct material cost, right? Then cost of the thread is indirect material cost, right? Cost of buttons is indirect material cost, right? Now you take shoe, right? You take shoe. Cost of the leather is direct material cost. Cost of sole is direct material cost, right? Cost of lace is indirect material cost. Cost of polish material, right? Indirect material cost. So like that, for every material, you have to apply these two conditions. If that material satisfies both the conditions, that is called direct material. Otherwise, indirect material. Clear? Now, why you have to differentiate between direct material cost and indirect material cost? Because here we are operating in the furniture market, and the furniture market is very, very competitive, right? So your competitor is also producing the same model of computer table. So this today, your competitor has reduced the selling price of his computer table. Now, you're also forced to reduce the selling price of your computer table. If you don't reduce the selling price of your computer table, what happens? You lose the market share to your competitor. It's very, very important to increase the market share, right? See, it should not happen. So when you are also forced to reduce the selling price, right? You have to see that the profits also should not decrease. What happens if the profits are decreased? The market value of your share will come down. As a result, your market capitalization will come down, which is not desirable from the shareholder's viewpoint. So even though the sales price is reduced, you have to see that the profitability is maintained, right? So for that, you have only two alternatives. In order to maintain the profitability, even though you reduce the selling price, there are two alternatives. One is increase the sales quantity, which is just impossible in this situation. Already you are operating in the competitive market, right? So increase the sales quantity is just impossible. So this alternative is ruled out. Then what is the second alternative available with you? You have to look into whether it is possible to reduce the expenditure, whether it is possible to reduce the cost, right? So your cost contains material cost, labor cost, other expenses, right? Again, material cost contains direct material cost, indirect material cost. From our discussion, right, you understand that the direct material cost occupies larger portion. Indirect material cost occupies very smaller portion. Yes or no? Yes or no?
Yes, sir.
Right? So
Yes.
direct material cost occupies larger portion. Indirect material cost occupies smaller portion.
Yes, sir.
Now, as a part of analyzing your costs, first you have to concentrate on direct material cost. So you have to think in such a way, is it possible to reshape the competitive table without losing the utility of the competitive table to the consumers, so that we can also reduce the quantity of the wood we use? So you have to think in such a in the direction. So here what I mean to say here is, first you have to analyze direct material cost. And there is no use of analyzing indirect material cost, because in the case of indirect material cost, which occupies very smaller portion, the cost of analysis may be more than the benefit of analysis. That's why individually, I'm talking about individually. Individually, it is not feasible to analyze indirect material cost, right? So you have to analyze direct material cost, and individually, it is not feasible to analyze indirect material cost. That's why, for the purpose of analysis convenience, right, we divide the material cost into direct material cost and indirect material cost. Now, coming to direct labor cost. It is the remuneration or salaries paid to the people who actually engaged, who are, here you have to add, tomorrow when I send the material, please add it here, who are actually engaged in the production, in the process of production, and whose portion will occupy the larger portion of the total cost of the product. Means here we have 10 workers, right? And each worker, we have 10 workers in the computables manufacturing department, right? So each worker produces one table a day, right? So for each worker, we are paying a daily wage of 350 rupees. See, each worker is directly engaged in the manufacturing process. Directly engaging means what? That worker cuts the raw wooden into required shapes, right? Then he does the polishing, right? Then he bends the iron frame and he puts the wooden pieces within iron frame and he fixes with nuts and bolts. After that, he applies some gum like that. Means he converts the raw wood into the competitive. This is called directly engaging, right? So each worker is producing one table a day, right? And for each worker, we are paying a daily wage of 350 rupees. So this is called direct labor cost. He is directly engaged in the production, and also the labor cost per unit of compatible is also occupies larger portion when compared to the total cost of the product, 1,000 rupees. So this is direct labor cost, right? Then indirect labor cost. It is the remuneration paid to the people who assist production. Means, for example, right, we have one supervisor. So the supervisor will not directly put his hands in the manufacturing process. He does not put his hands directly in the manufacturing process. He just supervises the work of these 10 workers. He just maintains that these workers works effectively without losing any time, right? And also they will help, he will help with any issue in the production, etc., etc. This is called helping to see that the production is carried on smoothly. So for the supervisor, we are paying a salary of 5,000 rupees per month. 5,000 rupees per month, right? Now, here we have 10 workers. Each worker is producing one table a day. So 10 tables per day is the output, right? So number of working days in a month, 25, right? So total output 25 into 10, right? 250 tables. See, this supervisor does not directly put his hands in the manufacturing process, and the cost of the supervisor salary per table is very, very less when compared to total cost of product. 5,000 divided by 25. How much? 20 rupees, right? Sorry, 250 tables. 5,000 salary divided by 250 tables, right? Per table, 20 rupees is the supervisor salary. Very, very less when compared to total cost of product. So this is called indirect labor cost, right? Now, what is the conclusion again? Direct labor cost occupies larger portion. Indirect labor cost occupies smaller portion, right? Now, coming to analysis perspective. So we have analyzed, right, the direct material cost, and we have been able to reduce some direct material cost. Now, coming to labor cost. Labor cost is again divided into direct labor cost, indirect labor cost, out of which direct labor cost occupies larger portion. Now, you have to analyze the direct labor cost again. You have to think in such a way, is it possible to make 10 workers produce 11 tables a day without extra stress on the workers? Presently, 10 workers are producing 10 tables. So is it possible to make 10 workers to produce 11 tables a day with the same time, same effort, same salaries, same wages? So you have to think in such a way. That means you have to analyze direct labor cost. Suppose if you analyze indirect labor cost, again, the cost of analysis will be more than the benefit of analysis. For example, you have reduced the salary of the supervisor. He will leave your company. Then you have to recruit another supervisor, for which you have to incur the recruitment cost, training cost. Again, you are incurring more expenses to control the existing expenses, right? Is it wise? No. That's why, right, indirect labor cost, it is not feasible to analyze indirect labor cost because it occupies smaller portion. Now, what is the conclusion till now? We have to analyze direct material cost and we have to analyze direct labor cost. Here for analyze. Okay. So it is not feasible to analyze indirect labor cost. Okay. Now coming to direct expenses. So these are the expenses other than material and labor, which can be directly identified with the product or service or department. Indirect expenses, all the expenses which cannot be conveniently identified with any product or service or department. Say, for example, in order to produce the computer table, we require a separate type of technology. And that technology is not available for the outright purchase in the market. So there are some vendors, right? We have the patent rights on the technology, right? Then they will let you know, they will let you to use their technology. In return, they charge something per table you produce. This is called royalty. So royalty is the direct expenditure. It's not labor, it's not material. It's the direct expenses, right? So, for example, for each table, we are paying a royalty of 75,000, right? Sorry, 75 rupees, I'm sorry. For each table, we are paying a royalty of 75 rupees. Now, you have to bargain with the vendor, like, sir, we have been doing business since a long time with you, and we have paid thousands of rupees every year as loyalty to you. But this year is the, right, question of survival. The huge competition is there. Market conditions are not good. So it is the question of survival in the market, right? So that's why, as a part of that, we are restructuring our costs, right? So we found that we are paying 75 rupees per table as royalty to you. So only for this year, if you try to make 70 rupees per table, we will survive in the market. So when we survive in the market, you also get the royalty from us. So if you're thrown out of the market, you also lose the share of the royalty which you are getting from us every year. That's how you have to try to bargain and convince the vendor to reduce the royalty. That means you have to analyze the direct expenditure. Right? Because direct expenditure also occupies larger portion. You have to analyze, right? But it's not feasible to analyze indirect expenses because indirect expenses themselves cannot be conveniently identified with the product. For a home, for 1 unit of output, how much is the printing and stationery? Can you quantify? How much is the traveling expenses per computer table? Can you quantify? How much is the petrol consumption? Can you quantify per table? No. So all these expenses are called indirect expenses. Printing and stationery, traveling expenses, postage, right? Etc. etc. Now, what is the final conclusion? Right? We have to analyze direct material cost, direct labor cost, direct expenses because they are occupying larger portion of the total cost of the product. It is not economically feasible to analyze indirect material cost individually, indirect labor cost individually, indirect expenses individually, because they are occupying very smaller portion of the total cost of the product. But if you combine, if you sum up indirect material cost, then indirect labor cost, right? Then indirect expenses. If you sum up these three components, they become bigger. Now you have to analyze them. So you have to analyze indirect material cost, indirect labor cost, indirect expenses in together. So the sum of this indirect material cost, indirect labor cost, indirect expense is called overheads. So these overheads are directly posted in financial accounting, FB50 or F-50. Printing and stationery, traveling expenses, postage, advertisement, etc. etc. These are directly posted in F5 general ledger, in F-02 or in FB50. From there, they will be transferred to control. This is the concept of the overhead. If you can understand this overhead, right, you can easily understand the entire controlling component, right? Actually, controlling component is very easy and simple, but the people, the trainers have made it difficult because they don't know. See, unless you have the experience in the manufacturing, right, you cannot understand the controlling. You cannot understand the cost accounting. So as a trainer, if you don't have the knowledge of the cost accounting, you cannot explain to the trainees effectively, right? So that's why most of the trainers, right, they touch controlling, right, only the basics. They complete the training, entire controlling in maximum 1 week to 10 days. But in our class, it is going to take 45 to 50 hours. So based on this, right, remaining things we will see tomorrow. Tomorrow, we will take one simple costing process, right? Tomorrow, I will explain you a simple costing process. Then I will explain you how you find out the total cost of the product, right? You might have seen many methods in your cost accounting, right? But what are the things we require to understand controlling, right? The understanding of the simple costing process. That's it, right? So if you understand that, you will be able to understand the controlling very easily. In controlling, the competition is very, very less, right? If you have the good understanding of controlling, right, the chance of getting the job are very, very high, right? Because controlling is very typical one. In the controlling, the business logic is very huge. The configuration settings volume is very less. So these things we will discuss in tomorrow's class. Along with today's recording, I will send you this controlling material, right? So this is 176 pages is there. Then you have the integration material, SD integration material, product costing material, and new GL material. So all these materials I will send you at one stroke, right? Then you take the printout of those materials and you have to get them spiral bound in the same order. I will give you all this information in the mail, right? So don't worry about it. Any questions from anybody?
Sir, I have one question. I was just doing the financial reports. It doesn't show the cash flow statement. So,
I will like check into that. What's your company code?
no. According to the lecture materials, we were doing profit and loss and balance sheet. How
Yes.
about the cash flow statement?
Oh, okay. Just remind me, I will tell you, right? Tomorrow remind me,
Oh,
I will
okay.
tell you.
Oh, okay. Thank you, sir.
Okay then.
Bye.
Okay, then see you tomorrow same time. Good night and good day.
Okay, sir.